brought to you by Ayoko, Africa's leading integrated technology services company. It's time for Tech Talk. Now, while South Africa is infamous for its poor savings culture, technology has the power to bridge the savings and investment gap via the growth of wealth technology platforms. Business Day's Mudiwa Gavaza sat down with 10x CEO Toby van Heerden for more insight on this. Mudiwa joins us now with greater perspective on wealth tech innovation. Mudiwa, thanks so much for your time this afternoon. And let's perhaps start by looking at SA's savings culture, right? It's quite a sensitive topic considering that many households, many individuals don't even have enough money to make it to the end of the month, let alone put aside money to save.
Yes, indeed, Ntaoleng. Savings and investments tend to be a very big, piece of the equation. I was actually attending a talk that was given by one of the more renowned economists in the country, Dr. Adrian Saville, just the other day, and he was highlighting the importance of, savings and investment to a country. And we know that from an economic theory point of view, the real value of saving and investment is on two levels. One, at household level, so that you can be able to weather certain financial shocks as and when they come,
Yes.
Family emergency, sickness, all of those things. But at a national and macro level, when we talk savings and investments, we're talking about all of us, putting our money in places like banks, fund managers and the like, and that tends to be, the country private pot, that tends to then be used for infrastructure projects because, some of your players out there in the private sector go and borrow money from the banks, and that money is made up of our deposits, at a household and consumer level. So this is not just something that affects people at that household and individual level, but it is something that then contributes to the greater economic picture.
And, talking about something that then contributes to the greater economic picture, I guess then we can bring in the informal market, which has also been interesting in a sense that it's a market that's not the savings culture, the investments are not tracked quite closely. What have you made of the how it could be tracked and the approach to that?
So recently we had an engagement with the team from 10x Investments. We had an engagement on our podcast with the CEO, that's Toby van Heerden, and we're just chatting about some of the things that they are seeing in this particular space. And when it comes to specifically informal savings, that seems to be something that a lot of governments, central banks, and finance ministries are looking to grapple with, measure, all of that stuff in a number of emerging market countries, especially because what tends to happen in many of those instances is that there are a number of issues that happen along the way. So on one level, you can have people that are saving and investing amongst themselves.
Yes.
In South Africa, the most popular and famous example is the idea of stokvels, which are basically informal savings groups that people tend to have. You put money in a pot equally, and then, on a monthly or whatever period you use, rotational basis, you get to have, the full pot, and it's used as a mechanism. And people have been coming up with those types of models in places like Brazil, India, Indonesia, and those, types of companies. So a lot of people in these countries are looking at how do you firstly attract those people, because one of the other problems happening is that many of the times people are getting into these informal arrangements because they feel like their savings, their money is so small that it doesn't really warrant actually putting into the banking system, or there is a general distrust in amongst certain communities and sectors of the population that don't feel like they trust the banks, or there's a little bit of hands-offishness, to formal banking systems.
And just from your interactions with the CEO of 10X, what can be learned from other emerging markets? I guess in the way they're also just using technological advancements in those models to try and capture the informal market.
So a big thing, that he was highlighting is just the fact that there have been a lot of strides, to make some of these things happen. He pointed, for example, at the fact that your two-pot retirement system, which has a huge conversation over the last year since it came into effect. I believe it was September last year. It's actually interesting that we're almost a year into that particular system, that it did a lot to actually spur conversations around what's happening in that space. One. And then secondly, he was talking about the fact that you need to educate people, just around the options that are available. And then thirdly, when it comes to the use of technology and platforms, technologies and platforms have actually been able to get a lot more people to register for themselves. You can register online. You don't necessarily have to go into, a physical location, a branch or something like that. And then the other thing that a lot of these platforms have been able to do is to offer low cost products, especially where people can, start investing, for example, in the stock market, for very small amounts, because back in the day, you needed to have, big amounts of money, to be able to get into that. And then the other one is that even with small amounts of money, we're also seeing a move towards, even pooling those small amounts of money and putting them into certain low-cost money market products, and all of those things where you can actually aggregate a whole bunch of these small amounts that are turned into big amounts, and through technology you can easily apportion to say you and your 10, 50, 100 rand, 1,000 rand, whatever it is, whatever gains we made from this type of investment, this is what's owed to you or you and your group. So those are the things that technology has actually been really good at doing. And I think the other one I'll just point at is personalization. And when I say personalization, I mean you just being able to put in a goal, to say, I want to be able to reach this. And then from there, you can see what are the options that are available to you. And in many instances, gamification as well, people getting little prizes, little trophies.
Yeah.
We don't really think about it because it almost seems like it's small, but little things like that do have a psychological effect on people where they see these badges on their apps and that type of thing. So good at actually being able to pull in a lot more people.
And let's zoom in on some of those platforms and how they work in, I guess, also wealth creation, right? Because we're not just looking at saving for the sake of saving, or investments, or trading for the sake of trading. We're also looking at creating wealth. What kind of wealth creation platforms are there, right, that actually create wealth for regular South Africans? We can even speak about the likes of an Easy Equities. We can even look at alternative assets. I know there are products where a South African can invest on cattle, even, a sort of personalization of something that South Africans view as wealth.
Yes, definitely. I like the example that you gave about the cattle, because I do remember there is a platform. I just need to remember what it's
Yeah.
called. Where they've actually been able to create a stokvel. And they have a platform around it, and they have millions in assets. That are around cattle, and that actually becomes more relatable, to a lot of our communities, because traditionally, cattle has been seen as that symbol of wealth, both in terms of utility, but also at the same time in terms of a store of wealth for people. That's one. Two is the other segment of platforms are the likes of Easy Equities and, some of the more aggregated platforms, because the banks have their own platforms. So
Yes.
whether you're with Standard Bank, FNB, Nedbank, ABSA, they tend to have their own share trading platforms. But we've also seen a move from the banks themselves. I'll give the example of Investec, which has its own platform called Clarity, which is competing in that easy equity space where you don't necessarily have to be a Investec client for you to use that particular platform. And then I would say probably the biggest innovation, it's been, some time since it came in, but one of the things that has been allowed is fractional ownership, of a lot of instruments. So if you're looking at investing in a Naspers share, for example, you don't have to pay the 2,000-3,000 rand, per share that you had to back in the day. You can buy a piece of a share, and that's one of the things that the platforms have really been able to do. The last one I'll just throw out there, because this is where we are now, is that we have seen a huge proliferation of crypto-based
Yes.
apps where people are now also coming in and investing in crypto assets, using fractional ownership once again. So very cheaply you can get into a Bitcoin, Ethereum, and any one of those.
And maybe that means I might be able to buy myself a portion of the Capitec share, because for 3,000, I don't think I'm ready to part with 3,000 rand. Mudiwa, thanks so much for your time. Let's leave it there. All right, that was Business Days, Mudiwa Gavaza. Brought to you by IOCO, Africa's leading integrated technology services company.